Welcome to the Market Huddle Plus. I'm Kevin Muir, and this week we have the good fortune to chat with returning guest William Nutting. Will cut his teeth at a variety of different sell-side shops as a macro institutional salesman and is now the author of the Nut Stuff Report. Will, thanks for coming back on.
Kev, it's great to be here. Thanks so much for having me.
It's going to be a lot of fun. We got a lot to talk about. And when we were chatting kind of beforehand, you said the first thing you wanted to talk about was geopolitics. What's on your mind?
Well, I think what's on my mind is, we've been through a lot of elections, and obviously the big election to come is the one in November. And I think there's a kind of an overriding thematic, which I've, fun enough, been writing about and talking about for probably in excess of 2 to 3 years now, which is that if you live in the East and you look West, you have a completely different view of the world versus living in the East and looking West. So if you bear me out on that analogy, it's kind of, you look at where the West has got to, and I say Europe, I say the UK, I say the US as examples, bad demographics, lots of old people, huge amount of indebtedness, a huge amount of entitlement. And I think a media that, is that always that, there was that great, it's a great expression. I think Ayn Rand said it. The truth is not for all men, but only for those who seek it. And I think at the moment, no one really wants to seek the truth, because the truth is really uncomfortable. It's uncomfortable for the Democratic Party. It's uncomfortable for the Conservative Party in the UK. It's deeply uncomfortable for Macron in France. And I think it's going to be deeply uncomfortable for Germany when they realize that their natural bedfellow is much more Moscow than probably anyone else in terms of their dependence on energy. So when you look at the geopolitics at the moment, none of what's happened, which seems to be surprising a lot of people, has kind of surprised us. I wrote a piece about 2.5 years ago that I called, which I slightly plagiarized actually from somebody else, but it was basically the rise of the oppressed and the revenge of the colonized. Now we've seen the revenge of the colonized, and we're seeing that now in terms of what's happening with a lot of the BRICS countries, a lot of the countries in Africa. But I think the rise of the oppressed is not coming from a lot of the places we thought it to. It's actually coming internally from our own societies. And so we're seeing it in the UK in terms of what happened with the election. I think you're going to see it dramatically in what happens in November. And so I guess, when you sit and you look at that, what that tells me is that there's a lack of confidence in the system. The system is not working. The system that should be working isn't working. And therefore, I think people are looking for an alternative system. But in the meantime, governments basically they've got rather benign growth. The US's growth is much better than the UK's. And therefore, I think governments are going to have to do something they're going to try and do something rather radical. But, this is one of the reasons why, I have this, little fund that proves I eat my own cooking. And we run the fund for 5 years now. And we've done a reasonably good job, and we've done sort of nearly 18% a year for 5 years now. So it just to illustrate kind of how our thematics and our portfolio works. I've got 12% of the portfolio in digital assets. I haven't got it because I've lost my marbles. It's because I actually think that the alternative system is really beginning to emerge now. And I think that alternative system is super interesting. So that's kind of
I'd like to dig in that a little bit, because one of the things that I think is happening in terms of on the politics/geopolitics side is that a lot of people are looking at, for example, the fact that the Democrats aren't doing well in the States, or here in Canada, we have Trudeau had just recently had a by-election and he got absolutely slaughtered. And a lot of the kind of free market right-wing folks are saying, look, the public is rejecting the leftist policies. And then I say, I kind of push back and say, no, well, let's look at the UK. And it seems to be more than, and even in France, we had what we thought was a shift to the right. And then actually, when it came down to it, it was actually a shift even more to the left, which was kind of surprising. And what kind of the theme to me seems to be is people are just pissed and just want change. And they don't really know what they want. They just want the incumbents to be gone. Would you agree with that?
I think that's right. I mean, it goes back to what I said before, which is I think there's just a lack of confidence in the system. I don't think people feel that the system is looking after them. All they ultimately see is spending on everyone else but them, They're seeing, much stickier inflation. They're seeing food price inflation. They've seen energy price inflation. The cost of living has gone up. And I think it goes back again to what I said before, which is that the era of free money of the last 20 years, in that environment when, if you were kind of talking biblically, we should have put something away. We should have, topped up the corn in the corn store and, made sure there's water in the water bowser. Instead, what we've ended up is with these kind of neocon governments, and in the case in the UK, a conservative government that lurched dramatically into becoming a sort of liberal Democrat government, chasing kind of nonsense, chasing all sorts of kind of minority thinking, and spending shitloads of taxpayers' money on all this stuff. And not realizing that ultimately, this party, basically has to end. And what's extraordinary in the UK, is looking at, the average age of a voter for the Reform Party is 70 years old. So the old are voting for the maintenance of the status quo, but the maintenance of the status quo is ultimately cremating the opportunities for the young. And so it's a very difficult, tricky situation, and it sort of goes beyond politics.
Now, one of the things that you mentioned is that your love affair with digital assets, and you said that you find that 21 to 43-year-olds, and according to Bank of America, don't want to invest in what their parents invested in. Could you just kind of expand on that and tell us how you're interpreting that and what you're doing about it?
Well, this is kind of music to my ears, because I think that on the one hand, I think if I've got a 19-year-old daughter and a 21-year-old daughter, and if I talk to them about investments, their eyes glaze over a little bit, and then they'll kind of say to me, "Wow, kind of a bit of Elon Musk," and I know you guys like gold, but I'm not sure I like the idea of gold. But hey, could I get digital gold? Or they love the idea of crypto. They like the idea of of the fact that the next iteration of crypto or blockchain is kind of the gamification of a lot of stuff in blockchain. And then the interesting thing about blockchain's next extension is the fact that it's going to give incentives to people to participate in the blockchain and in tokenization. And I think that's a huge opportunity for the young, and I think they find it dynamic and young and exciting. And they can understand it because their entire life and their entire ecosystem sits on their telephone. There's nothing more useless than a car that's for sale with, cinema screens in the back. Kids just look at those enormous screens that used to sit in the back of, SUVs and cars. They look at these screens now and know, wow, what were people doing with this stuff 5 years ago?
I had one of those cars with for the little kids.
Yeah, so did I, exactly.
All right. So one of the things that you do with your letter is that you actually produce like all your positions, and so you have 60 odd positions that you list, and you put your costs and your trading, and you track it and stuff like that. And so this section that we're talking about now with the digital assets, is this your Brave New World section?
Yeah, exactly. So that's Brave New World, and then it's always that difficult thing, isn't it? Which is that on the whole, everyone says diversification is a good thing. And fun enough, I was brought up in an environment where, diversification was always said to be a good thing. In reality, what we now know, from the last few years is that ultimately only, somewhere between seven stocks in the US and probably 5 or 6 stocks in Europe have frankly been the stocks that have really mattered for the last, God knows how long. I don't know how long that environment's going to continue. We can have that deeper conversation, later. But as I say, I think, I believe that if you've got the thematics right, what I kind of want to have in each thematic is a soccer team. I think I've given you this analogy before, which is I kind of want to have a little bit for everyone in that thematic. And so it ends up being quite a big portfolio. To be honest, I don't change the portfolio very often. Someone said to me the other day, "What do I do?" And I said, I basically buy stocks at the beginning of the year, and then I write letters. And that's kind of slightly what it feels like.
One of the things, let's talk about the fact that you've highlighted that all the performance or most of the performance is in a handful of stocks. I look at that and it actually scares the bejesus out of me. And I think that the market is becoming increasingly unstable based upon the narrowness of this rally. Does it worry you?
I mean, it worries me to a degree, but I think it's incredibly logical because I think this whole advent of AI, you've got the most giant multi-trillion dollar case of FOMO I've ever seen in my entire life, and you've got FOMO at a chip level, which is kind of the FOMO that we had at the optical networking level with JDS Uniphase and Sienna back in the day, but it's kind of on steroids. And obviously there's the Robin Hood and the retail investors out there in the way that there wasn't back then. But I can also understand why, I think the statistics are that for the last 17 years, 100% of incremental revenue growth, incremental earnings growth in the S&P has come from technology. It's 100%. And so, funnily enough, it goes back to kind of what I said at the beginning about the geopolitics, which is you've got this really bizarre irony where the West looking East is lecturing the East on their rules-based order and how things work. And as a result of giving the East and the global South and the BRICS their technology, they've opened everyone's eyes. And everyone in the East is looking West and going, hang on a second, guys. We now see in real time what's going on. And we're not buying your bullshit anymore. And so I think the technology space has become a kind of giant vacuum cleaner for the rest of the market. And it's sucking up eyeballs, interest, investment banking focus, market capitalization. But the law of second derivatives will kick in sometime. I don't know what's happening to all these NVIDIA chips, but I suspect there's a lot of people buying NVIDIA chips and putting them in a warehouse and locking in supply because they're worried that if they don't buy the chips and they don't get enough of them, whatever enough means, someone else is going to buy them. So I think, and you're beginning to see that. I mean, surprisingly, Goldman Sachs actually put out a really interesting, good report in the last couple of days, pretty much saying exactly the same thing. And I think, it's a brave call to make right now. And the other thing I would say is, if we're right and AI continues to be ubiquitous, it's what's extraordinary about AI simplistically is that it's like a sort of stateless migrant. If AI is a person, it wouldn't have a passport, it wouldn't have a driving license. It doesn't have an identity. And so the interesting thing is that one, it needs energy. The S&P energy sectors, I still think 3.5% of the index weight. And secondly, it needs an identity. And so what gives AI an identity is going to be blockchain and digital currencies. And so I kind of, there's that sort of that simplistic concept of, a shark is an absolute killer underwater and it's fantastic in its ecosystem. You take it out of the sea and put it on the beach, it's completely fucking useless. It just flounders around and dies. So I think fiat currency in an AI environment is like a shark on the beach. It's useless. So you've got to find something that works. You've got to find something that works on the beach. And I think what maybe works on the beach is going to be digital assets.
Okay, but even if that's the case, don't we have way too much AI? And the other thing I wanted to ask you is, you referenced the dot-com bubble, and so you and I are both old enough to remember it. I personally think this one is bigger, and I know everyone's telling me why it's not bigger, but I think this one is just more concentrated in those 5 names. And I recall the Scott McNeely lecture he gave to us for the CEO of Sun Microsystems, when we took his stock to 10 times sales. And it was like, what were you thinking was the title of his piece? Or, I don't know if it was a lecture or if it was actually something he wrote. And then I look at NVIDIA, the world's largest company in the world, and it's trading, 40, 50 times sales. And I just can't help but think, yeah, I get it. It's growing. I get it on a peg basis. It's not that expensive. But the law of large numbers, you hit points where you just can't grow anymore.
Well, I think that's right. And as soon as you get a slowing number, then Nvidia's. I've never owned Nvidia in the portfolio. I own Palantir. I've owned some AMD, which I sold quite recently. I've owned a Taiwan Semiconductor. So I've owned some picks and shovels, but I've actually never owned Nvidia. And I think Jim Cavello at Goldman said it really well. Actually, he said basically, I struggle to believe that the technology will ever achieve the cognitive reasoning required to substantially augment or replace human interactions. Humans add the most value to complex tasks by identifying and understanding the outliers and nuance in a way that it is difficult to imagine a model trained on historical data, would ever be able to do. I think that is completely right. And also, I'd encourage you to go and listen to. I think Nikolai Tangen, did a call with Anthropic, the Anthropic CEO Dario Amodei. And the Anthropic CEO is one of the guys who came out, bomb busted out of ChatGPT. And I mean, it was just a masterclass in weirdo Babble speak. I mean, it's just the guy works with his sister and plays video games to relax, and I really don't want people like that anywhere near running the world. So the answer is, I'm not a cynic. I don't want to say I'm an AI cynic, but I just think that there's no balance. There's no balance anymore in the market, and I think that to me is the opportunity. And I feel with my positioning, if you look at the balance in our portfolio, I think we've got much less. We're quite uncorrelated to a lot of that stuff. I mean, we've owned the GLP-1 stocks, we've owned Lilly and Novo Nordisk as well. And I think they're slightly the same way, which is the day that GLP-1 stocks and AI fall out of bed at the same day, it's going to be a very painful day for a lot of markets. So I'm laser focused on this stuff at the moment.
All right, so I'm going to go through some of your positions here that I'd love to ask you about. So you have different categories. You say needs, wants, special sits, and then Brave New World. Oh, and big.
I have highly complicated. Non-university educated. A student of the look out the fucking window investment world. So I have to keep my themes simple, like needs and wants.
I like
Maslow's hierarchy.
All right, so your needs. Let's start with the fact that there's a lot of oils in here. Well, I wouldn't say a lot, some. And I see Oxy. First of all, is that your big main kind of console?
Yeah, I mean, we've owned Oxy for a long time, and I'm very happy to a lot in stocks like Oxy. I'm very happy to be sitting behind Uncle Warren, doing what he's doing. So I think simplistically, yes, I think Oxy continues to, my view on commodities and my view on energy and oil has been pretty consistent for the last 5 years, which is that if I'm sitting with my children, I understand the world that we want to get to, but I think of it like a chasm, which is that in order to get from one side of the chasm to the other side of the chasm, there's a bridge. And the bridge is, unfortunately, whether we like it or not, it's made of fossil fuels. It's made of oil, coal, natural gas, etc. And what we've done is we've failed to invest in the bridge. Now, if the bridge falls down, we don't get to the other side. And so what we have to do with governments, and what we have to do is we have to fund things that we ultimately don't want to do. We sometimes have to do things that we don't want to do because it's going to facilitate us getting to a place that we need to get to. And so therefore, I think, that trying to find still what I think of, cash generative, cheap energy and oil companies, to me have a place in a diversified portfolio. And that's why, we've owned Oxy. I've got a much bigger bet on offshore and services. So we own things.
Well, that's going to be my next question, because you do have a big bet there between Tidewater, Valaris, and Weatherford. Are those all offshore? And rig?
Those are all offshore. I mean, Tidewater's boats and has been stellar. I mean, that kind of comes down to kind of a little bit about how I do things, which is that as I say, I buy some stocks at the beginning of the year and write letters, but I also travel. So I did 17 countries last year, and one of the things I did was I did a trip to Namibia in the early part of last year in Southwest Africa, which is German Southwest Africa. And there's a port in Southwest Africa called Walfish Bay. It's probably one of the most important ports in the world now. An offshore Namibian oil, not Namibia rather, it's just a huge growth opportunity and deep, fantastic. So I was down there. I happened to meet the guy who basically runs the port. I had a tour around it. I met the guys in Tidewater. I met the guys from Weatherford. And we started talking about what was going on, and it was just so clear to me from those conversations on the ground of what was going on. So those are I'm afraid that's a sort of kick the tires type analogy, where if you actually, do the travel and go and talk to the people, you really begin to see what's going on there.
You truly are the true macro tourist. I just talk a good game. You actually go do it. And those are quite large positions for you. Like I'm looking at, Tidewater, you have 3% 300,
Yeah.
basis points. Valaris is 2.5. Weatherford is 360. Like that's a big portion of your portfolio considering you have 60 names.
I mean, it is, and I think it needs to be. And
Yeah.
I look at the cash generation of these companies, and I've got to try and, I can, at the one end I can have kind of some emotional stuff that I own, but there I think the fundamental nuts and bolts of a pricing cycle. One of the things from a higher real rates environment is that going and building a multi-billion-dollar drill ship or a multi-billion-dollar service vessel, even if you could get the shipyard capacity, it's not happening at the moment, and so you've additionally got obviously a big support in shipping companies at the moment because of our friends the Houthis, and playing silly buggers in the Persian Gulf, and are continuing to do so. So again, we also own Frontline, we also own Scorpio tankers, so we've also got kind of the some fairly good sort of lateral plays on shipping as well.
Okay.
But I like businesses where you can look at the fleet, you can look at the pricing, you can look at capacity, you can look at demand, and you can see fairly clearly, that these companies are paid down debt, they're generating boatloads of free cash flow, and it's and those to me are excellent equities to own.
Because it's what I'm going to do. I'm going to ask you to give me another story out of your needs that you haven't talked about that you like, that you're most excited by.
Another story out of needs that I'm really excited about. Oh my God. Okay, hang on a second. Let me just...
They're like your children. You love them all, so it's tough to pick one.
That's never a problem. No.
Good thing your children aren't listening. And extra points given I'm Canadian. You do have some Canadian little shitter names in there. So I was like oh my gosh. But don't pick it just because of that.
So I'm just thinking of, in terms of, so I would say, still the coal stocks, still CEIX.
Okay, so what are the coal stocks you own? Which ones?
So I own CEIX.
Okay.
We sold out of Arch. We sold out of Peabody. Stupidly, I wanted to buy that back. So that's CEIX is basically been it still remains the big play. I'm not sure that's the best need stock to focus on.
Okay, well, then pick another one. What else do you like?
Funnily enough, Greg's in the UK would be one of my
let's
needs.
Talk about that. What is it? I'd like, listen, I don't even know what
Greg's is. If you come to the UK,
yeah,
and you can't stand Starbucks, and you want to go and buy the best value breakfast in the UK, you go and basically go to Greg's. And Greg's are famous in the UK for making the sausage roll. And then they made this vegan version of a sausage roll. Okay. And Greg's is somewhere that makes fantastic food, excellent bread delivered on a daily basis. And it's a classic example of a high growth fast food business that is pulling in just an increasingly wider spectrum of the population. As the cost of living crisis begins to click in, more and more people are looking at Greg's and seeing the value for money offering. They're growing their footprint in the UK massively. They're in petrol stations. They're going to be in airports. The food is fantastic. The food is really good value. It's got a brilliant management team, and it's as I say, it ties into my kind of macro political environment, which is obviously making the case that I think many more middle class people are going to find themselves eating at Greg's.
All right, I like it.
The other one is the other one would be uranium. But frankly, everyone knows the case for uranium. The stocks have actually been incredibly disappointing so far. But I think we all kind of get a sense on what the holy grail is for the next generation of power, unless you're going to tell me that the nuclear fission is going to show up sometime in the next 2 years. I'm going to tell you that that uranium's going to continue to work, but I think it just
Okay.
requires some.
All right. Wants. Let's move on to wants. You got some, all of these are quite an eclectic mix of companies. DraftKings, Genius Sports, Eli Lilly, highlight something there that you want to talk about.
Well, listen, Lilly and Novo Nordisk would be obviously a two, that we know the case. Novo, just an extraordinary wake up for a business that, no one knew 2 years ago in Europe. But, I think this whole GLP-1, kind of weight loss control, drug phenomena is huge. And it's huge in terms of counteracting obesity. It's huge for counteracting diabetes, which I think still has the biggest drag on healthcare budgets. And I think that even if, as they get the price down, I think they're just going to continue to expand the overall market. These stocks have done, incredibly well, and they've been absolute, huge home runs for the last 2 years. But I still, I still see no reason to jump off these because while they continue to work, and clearly, the ramifications of, if you look at you look at a lot of fast food companies in the US, having a really, really tough time. But there's some quite interesting scenario analysis you can do if you make the case that, the median obese person in America might be, 20 pounds lighter in the next 2 years. It's new clothes, less fast food. There's all sorts of fun.
What would get you worried about that position? Like, when do you, let's talk a little bit about your sell criteria. Like, because you have mentioned some names that you have trimmed or gotten rid of. So what would be the point where you would be thinking, okay, time to sell this? Like, do you wait for it to roll over?
I've always thought with growth stocks, it's simple that a growth stock, to my mind, when you look at consensus earnings, I think they have to earn their 2025 number in 2024. And so what I want to see is earnings estimate revisions continue to step up, on these stocks, so that you constantly get bailed out of the valuation by the positive earnings revisions. And that's the kind of, I was writing about NVIDIA on Monday. I was just making the point. I talked to a very, very, one of the best tech fund managers, I think, in the world. We were talking about NVIDIA and how he would look at that. And that was one of the points he was making out NVIDIA, which is the time I think we'll be looking to exit, is when those earnings estimate revisions, come down. And it's interesting on NVIDIA, just and you could do the same analysis on Novo and Lilly. If you look at the stock price charts and then you overlay the revenue positive revision data, the revenue positive revision data is much, much higher is much higher and more dramatic than the stock price. So actually the stock price, if you were being rampantly bullish, you could almost say the stock price actually has kind of almost lagged the fundamentals.
Right. On a peg basis, I believe the NVIDIA has gone down.
Yeah, exactly. Yeah. So I think, I don't spend that much time reading earnings reports, but in the case of something like a Novo and a Eli Lilly, I do keep an eye on the earnings reports, and I do keep an eye on the earnings estimates. And as I say, if I had a risk to the portfolio, if I woke up one day and found that GLP-1 drugs caused cancer, and the world fell out of and the world of and NVIDIA missed the numbers, I'd be having to puke. I'd be having to puke some AI companies. And so, not that I own that much, but I'd have to definitely puke some AI companies, and obviously we'd have to puke my GLP-1 company. So I'm just, those are areas I guess I'm quite focused on.
You'd have to puke the AI companies because you'd be worried that the same people would sell them. I'm sorry, I don't really get that.
Yeah, I'd be worried. I think if I saw NVIDIA miss the numbers.
Oh, I see. I think completely not GLP. If you saw anyone miss the numbers, you're saying that's it.
I think, as I say, I think if you came down off planet Earth and someone said to you, "What's been happening in equity markets for the last couple of years?" you basically say luxury in Europe and AI and weight loss and obesity in the US.
Right.
And if you put all those companies together in market capitalization, that gives you, I would say, 30% of the 40% of the alpha probably in markets.
Oh, yeah. It might even be higher, don't you think?
Probably higher, probably much higher.
Because, like, let's
So that's
face it,
basically,
like you go look at the S&P equal weight, it's unchanged at best.
so that's the market. So I think
Yeah.
that's your.
All
Yeah,
right.
someone sent me a great chart saying, yeah, SMCI, Nvidia, Meta, Google, Amazon, and Microsoft, and then Nike, Intel, at the opposite end, Tesla. So yeah, you're right. I mean, it's huge.
So one of the things about you, Will, is that you actually have a lot of great context because of your years on the street. And a lot of it I've heard, in some of my chat groups, I've seen people talk about you and they're like, oh, he really knows the chip industry. And that was kind of seemed to be what you were focused on. I would love to hear kind of what your context and like the feel you get in terms of people's positioning when it comes to NVIDIA. Like, are most people long and enjoying the ride in terms of, like, I'm obviously not talking about retail, I'm talking about fund managers, or are we getting this situation where this is rising and it's actually painful and they're having to go and buy some just to participate and protect their jobs and kind of almost getting squeezed?
I think it becomes a portfolio issue, isn't it? When these things become such a big part of your portfolio that you're forced to constantly sell the position,
right?
And I think there must come a time when you sit down with investors and investors say, well, if you don't own, I mean, listen, I have not owned Nvidia. Of the top 7 companies, we basically own, Google has been the only pretty much the only big tech company. I've owned a bit of Microsoft, but I actually, bailed out of Microsoft a long time ago, a while back.
But you in your letter, though, you're probably able to take more risk in terms of if you don't track the index for a year, it's no big deal. Whereas the Fidelity Magellan guy is going to get crushed.
Well, completely right,
yeah.
and that's the argument. That's my argument about the fact of so far, why the hell would you pay an active manager to manage your money? When for the last 5 years, what's the S&P done? 16.5% a year for 5 years, something like that.
yeah. But do you think that'll continue though? Because I actually think that's quite a scary fact, in the fact that we're getting more and more narrow. And if anything,
to answer your question, if inflation is sticky, but it's not as sticky as everyone thinks it's going to be, and the job market in the States looks like it's beginning to moderate. So if that's going to, and we've obviously got an election coming up, so if that means that the Fed is now clear for a couple of interest rate cuts, does that mean the market's moved in advance of that, or does that mean that the broader market is actually going to start to perform? I think the argument is that the broader market actually probably performs a bit better, but I don't know that means that, that doesn't make me feel that I kind of need to do a dramatic amount to the portfolio, So I think just at the margin, you're tweaking your way around the place. But does that, if the market broadens out, does that a fundamental sell case on Nvidia? No, the fundamental sell case on Nvidia is when the fundamental numbers begin to show that the second derivative is slowing. And until that happens,
and if that happens, do you think that the market, because it's so large, do you think that there's a shift, like we get a rotation that actually causes the broad market to go bid? Or do you think it causes a cascading of downward of the entire market?
Yes, because if you sit on a bar and you put 3 shot glasses, you put a bucket and you put a pint mug, and the bucket of market capitalization, slops out into the pint mug, and it slops out, and you get the argument, right? There's a dustbin of market cap, and the rest of the market is a bunch of shot glasses and a bunch of pint mugs.
So, Will, you just gave me the most British explanation ever. Okay. All right.
By the way, I saw also that in New York that someone had paid McKinsey $4 million to come up with a conclusion that it's better to put a dustbin bag in a dustbin than it is to leave it on the street in the bag. I thought that's going to go down as, chapeau to our friends at McKinsey for good advice.
All right, let's move on.
Yeah, sorry. Dustbins and pint mugs.
Right. So you're a definite believer in the rotation. If we get a situation where one of either the GLP-1 or the AI disappoints, that money will move into the rest of the market is what you think. It won't cause a precipitating factor, cause a
And I worry
correction.
more about and I worry more, fun enough, about the semiconductors. I'm worrying more about the latter. And you're beginning to see the Twitter sphere is now full of people who are suddenly becoming questioners on the whole AI thing. So I'm just beginning to talk about that stuff a bit more.
Okay, sounds good. Now let's move on to special sits. A hodgepodge of different things. Give me your favorite.
Well, listen, Tiny. Am I allowed to talk about sort of minnows?
Yeah, I know. You go. You talk about whatever you want.
So the two best special situations I own are Power Nickel and Cardiol. Power Nickel is a Canadian company. They have nickel, but they also have they've also discovered a whole bunch of other assets. They've now got Friedland. They've got the who's who of kind of Canadian mining guys as shareholders, super involved. Getting a geologist who knows his eggs from his onions to look at the data, as it was described to me the other day. If this was another Norilsk nickel, this is how it would begin to look. So I just think that Power Nickel is one of these companies that's got an incredible management team. They're super well incentivized. It's got an extraordinary team of people who've had a look at it. It's minuscule, but I think I think they're going to basically produce powdered high quality nickel. And nickel, whether whatever metrics you believe on the adoption of EVs and batteries, there's a huge need for nickel, and they're going to be producing some of the highest quality nickel in the world.
So this is PN, Paul Nancy in
Paul Nancy, and my father's initials are PN.
All right,
and my grandmother's were as well. So serendipity was slightly, it was meant to be. And then the other one, fun enough, I love, is this company Cardiol. Again, incredible team. So in the post-vaccine environment, myocarditis and pericarditis are fun enough, two diseases that have killed two teenage friends of mine's children. So it's got a very personal thing for me. And the team at Cardiol have basically just put together some absolutely world-class drugs. And they're going through FDA testing at the moment. The drugs work, and I think it's just going to be again, incredible science. Well validated by trials at the Johns Hopkins. These things have been moving. These things have been moving for the last 2 years for a reason. And when you look at the absolute market capitalization of them, I think they're both that and Power Nickel are going to be huge opportunities. But they're very much kind of what I call, they're sort of they're PA type opportunities. But I feel, close to the managements. I've met managements in both cases. I've got a good sort of perspective on who the shareholders are. I think they've got very sticky shareholder bases. And again, I kind of like a few non-macro correlated ideas in the portfolio. And again, for the size companies they're quite big bits of the portfolio,
right.
And so I want people to know that, when I have conviction, we have conviction. Just exactly the same with the marijuana, with some of the cannabis and marijuana companies that we own as well.
Right. I was going to mention. Okay, so wait, before we go to the marijuana, before we start talking pot, that's CRDL on the NASDAQ for Cardiol.
All right. CRDL and PN.
In Toronto no, it's not even Toronto, it's the venture. But anyways, all right. So marijuana, you got a couple of names in there. I notice you have the MSOS and you have the Glass House brands. Why does everyone own the Glass House brands? Like, I own some, but like I don't really. Is it that much better a company?
Well, I guess it's got a big strategic shareholder, right? So I guess that to a degree is kind of what gives people confidence. And I guess the flip side of it too is that I think this is a scale business, and I think the big takeaway probably is that if most of our leaders in the UK and everywhere else smoke more marijuana, the world might be a much better place. and by the way, just exactly the same way as Trump has been smart enough to embrace the crypto bros because he's realized that ultimately it's an incredibly good way of engaging with a very big disaffected bunch of voters. I think it's also going to be an extraordinary vote winner to legalize marijuana.
Got it.
And so I think politically, these stocks are so cheap. They're so unloved. There's hardly a single Wall Street analyst who, I try and find the spaces that if the market is being driven by the machines, and the momentum machines are what they are, and we see what they're doing with Nvidia and everything else, at the opposite end of the spectrums, where are the machines not? Where are Wall Street not? Where are there no analysts? And there are no analysts covering coal stocks anymore, and there are no analysts, hardly any analysts covering the marijuana or cannabis stocks. So the complete contrarian in me, really likes those opportunities, and consequently, that's why we have positions.
Okay, finally, we did the crypto, so I'm not going to do your Brave New World section, but we will finish up with your big picture section. I noticed that you have something near and dear to my heart there. You have some Japan, just like the pure index.
Well, it's still so cheap. I mean, Japan is still so ludicrously cheap. So I mean, to be honest, cheap. Someone always used to say to me, "Cheap goes with the nasty," but I mean, I think it's cheap. Secondly, I think gold is insurance for governments doing stupid things. Well, governments, your government, my government, everyone else's government still going to continue to do stupid things, and ultimately, in order to bribe societies that have become so entitled with so much debt, they're going to have no choice but to continue to debase the currency. And I would say to anyone, Kev, who's an investor, I say, do this analysis, get a piece of paper out, write a number down on a piece of paper of what you've earned in the last 3 years, and then subtract from it the growth in M2 money supply. And realistically, M2 money supply is up, what, 30%? So technically, you've really earned 30% less than you think you've earned. And so the question for investors, I think, today is, how do you protect yourself? How do you protect yourself against that? Against what I think is going to become a bunch of money printing. So I think gold in some shape or form. And as I say, I think being smart with digital assets is, to my mind, just going to be higher highs and higher lows.
Got it. All right. Will, why don't you tell people that if want to learn more, can they write to you and get a copy of your portfolio and see what you're up to here?
Totally. So we're on Twitter, we're on Telegram, which I'm a big fan of, and in fact, I own the TON token, the Telegram token, in the fund. And actually, if you want a real example of how old, Web 2.0 to Web 3.0, looking at WhatsApp versus Telegram as businesses and how they run their businesses is a super interesting case model. I've written quite a lot about that in the last couple of weeks. Nut Stuff, NUTSTUFF, www.nutstuff.co.uk. I think we give you a free trial for a month. Please sign up. I write twice a week. I normally write 3 times a week in the winter, but twice a week in the summer. I publish the portfolio every Monday. You can email me. I'm happy to chat to people. And as I say, we kind of try and connect the real world and the financial world. And I think there's a bit in there for everybody.
All right. So for those who are interested, give Will an email or go onto his website and actually sign up for the free trial. And you can see all of the portfolio, all 60 names. Will, it's been a real pleasure having you on the show. Thanks. And we're looking forward to having you again.
Kev, thanks so much as always. And I think you just do a great job. And, it's just super listenable too. And I don't know how people listen to a 4-hour podcast. I mean, my idea of hell would be listening to 4.
I don't know how I do it. That's the real problem.
4 hours of me would be my idea of hell.
Well, we're going to have to get you back and we'll do another 4 hours. All right. Thanks again, Will.
I look forward to it.
Take care.
Thanks.
Bye-bye.
Cheers.